Recently, I had a buyer ask if they should buy their interest rate down. This is a great question and something I've also seen Facebook posts from buyers as well as realtors about. What do you do? How do you know? I'm Alison with NextHome Family Tree Realty, and I'm a realtor. This is my opinion. I'm not a lender. So check with your favorite lender, or if you don't have one, let me know and I can help you find the right one. Rates have been going up in your home shopping. You remember hearing of rates in the 3% range and some in the 2% ranges. Those rates are gone. Bye-bye. And they're going to be gone for a little while. You were just quoted 5.5%, 6% or more. It takes your payment way up, right? What do? What options are out there for you? Have you thought about buying your interest rate down? Buying down your interest rate can be done in a few ways. The first one affects the life of the loan, keeping your payment consistent for 30 years. The second one affects only the first 2 years, often called a 3-2-1 buy down, which means your interest rate might be 4% for the first year, 5% for the second year, and 6% for year 30 to 30. Both options are going to cost money upfront to do, and that amount will vary upon your credit score as well as your debt to income ratio. Right now, in July 2022, buyers are finding their forever home, but they might not be buying it with their forever loan. And honestly, not often is the original loan the forever loan. According to bankrate.com, in October 2021, 28% of millennials, those are Americans, aged 25 to 40 have refinanced, while 17% of Gen Xers, aged 41 to 56 have refinanced, and the baby boomers, 17% also, aged 57 to 75 have refinanced. But what does that mean? It means don't get caught up in the interest rate unless you plan to never refinance. Interest rates fluctuate, going up and down like a wave. For the past few years, we've seen an abnormal cycle of low interest rates, and now we're back in a normal interest rate market. The rates we were seeing were the lowest rates in history. So a mortgage in the 5 or 6s is still low compared to the average mortgage rates over the last 50 years. That being said, we've seen mortgage rates drop to new historic lows once or more every decade. So we should see mortgage rates back in the 3s before too long. If we're lucky, they may even fall lower. Have a conservative view when discussing financial markets. Since it's impossible to know exactly how it'll plan out, I err on the side of conservative. The moral of the story is that whatever mortgage rate you purchase your home with today, look at it as just a temporary rate. You'll have an opportunity to refinance it eventually, which could reduce your interest rate and thus your payments significantly. What's important is that the mortgage you use to purchase the home today has payments you can afford enough to continue paying monthly without missing any other payments or needing a new credit line to live comfortably. You don't want to be house poor. Think of your mortgage as a tool to help you buy your new home and hold you over until you can refinance and nothing more. Now, back to discount points to buy down the rate. A lender might offer a 0.25% interest rate reduction for buying down a point, which may be around 1% or more of the loan amount, depending upon your credit score. This could lower a 5% interest rate loan to a 4.75% interest rate loan. Again, this varies based on your debt to income and your credit score. Your loan officer will help you do the math on how long it would take for you to recoup the cost of the points. This will help you decide if it's worth it. The 3-2-1 buy down only buys down your interest rate for up to 2 years or 24 months, but means that your payment increases after the first year and then again after the second year. However, the rate holds firm after that. This one usually costs the money you would be saving on the interest rate and gets paid up front. However, you or the seller can pay for this and thereby reduce your monthly payment. This is a great option for people who are looking to keep their monthly payments low and plan to refinance within the first 24 months. And they have to make sure they can handle that increase at the 13th month. But remember, this option ends once the third year starts, so they will want to make sure that the loan officer has them on a watch list to ensure they refinance as soon as the rates drop. The traditional buy-down reduces the interest rates on the loan for the life of the loan, thereby reducing your monthly payment for a full 30 years. This option won't provide as significant of a monthly savings as the 3-2-1 option we just discussed, but can be a good option for those that are more conservative and want to protect themselves from needing to refinance sooner. Are either of these right for you? What if instead you had your seller pay your mortgage insurance up front? Did you know you could do that? Yeah, a savvy agent can help you do that. What's mortgage insurance? Watch my video on that after this one. I'll place it at the end of the video and in the description down below. A seller can also pay for your mortgage insurance through the sale of their home, if agreed upon. Lenders have told me in the past, when asking about buying points down for my own home, not to do it unless I was planning to keep the loan for 30 years. Since most people don't, and honestly, I haven't either, I'm so glad I didn't. I personally bought and sold 4 homes, and I've never paid for points as it just wasn't worth it. However, I have refinanced almost every one. Each buyer's situation is different, so remember, I'm not a lender. This is my opinion. To find out what's best for you in your situation, you need to speak with a quality lender, and I have several that I can personally recommend who will take great care of you. So reach out to me and let me know if you need one, and I'll be happy to connect you. Have questions? Let me know below, or text or call me at 707-365-2563. I'd be happy to answer your questions for you, and if you need an amazing lender, I can refer you to someone also. I have several to choose from, and remember, I'm Allison with NextHome Family Tree Realty, and I've been rooted in Solano County for over 40 years. Ta-da!